Chuck Carnavale. I'm the Chuck in the Markets Up Chuck. And today's blog was talking about is really kind of oriented to smartphones, but more to human ingenuity. And one thing that I think we always have to keep in the forefront of our minds is the fact that as the world progresses, humanity continues to make advances in technology and achievement. And one of the points, we've talked about the stock market, how bad it is and how bad it was and how good it's gotten and whether it can hold up or not. And then a lot of people keep trying to make correlations to the Great Depression of '29. But the point I want to make is the world is quite a different place now. One of the things that didn't even exist back during those times was the smartphone, and originally started out as the PDA, or the personal digital assistant. Now it's kind of morphing into the smartphone, and those things are becoming synonymous. And there are three major players there, and I wanted to look at them from a business point of view because there's a couple of things I think are important. If you look at Apple, for example, which obviously is the maker of the iPhone, I want you to notice that and I'm going to go back just for the last decade or so, just around a 10.5 year, 10 3/4 year period, since calendar year 2000, if you will. Bottom line is that Apple had some really poor earnings until along came the iPhone, and obviously the iPhone really changed Apple's business quite a bit. You can see their earnings growth accelerated dramatically, where they were relatively flat to down earnings in the first 4 or 5 years here. Then they accelerated dramatically, starting with calendar year 2003. And of course, the stock price responded. And right now, I want you to notice that Apple is trading at a very high multiple of 32 times earnings. But the track record for shareholders during this period of time, $100,000 investment on the beginning of calendar year 2000 or the end of '99 would have grown to $717,000. That's a 22.4% compounded rate of return, which is extraordinary. And keep in mind, most of these shareholder results came from a business that didn't exist. Now, I can contrast that to another competitor of theirs, which was, one of the ones that really kind of started this industry, but has never really been able to get any traction, and that's Palm. And I want you to notice Palm had no earnings and even significant losses. And over the same 11-year period, the investment in Palm has been catastrophic for shareholders. $100,000 would have lost a compounded 29.1% a year, or turned $100,000 into $3,800, and that's even worse than what the stock market did during the same period of time. But then finally, the last but not least I want to take a look at is Research in Motion, the maker of the BlackBerry, which really from a business to business point of view, BlackBerry has really been very popular, but they're also now looking at the consumer market. I want you to notice that Research in Motion has had tremendous earnings growth during this period of time, and like Apple, it has no debt on the balance sheet, and like Apple, it's generated an extraordinary track record for its shareholders since the beginning of calendar year 2000. $100,000 would have grown to over $1 million. That's a 28% compounded rate of return during a period where the stock market lost money. And part of the message here is this. We all talk about the recession in the stock market, and I do want to point out that RIM's stock price did fall precipitously during this period of time here. We did have it fall from a high of 138, and it got all the way down to 35. But I want you to notice that RIM actually generated very strong profit growth during this period of time. So the business itself was intact, even though the stock market treated it horribly. But even with that, horrible performance during this period of time, over the last, since calendar year 2000, this company has generated a tremendous compounded rate of return for its shareholders. This is Chuck Carnavale. I hope this gives you an interesting perspective on, how different things can be and how different the market can be, and different stocks can perform in different, ways during the same market. It's Chuck Carnavale saying thanks for listening. Talk to you again.